Good morning and welcome. Today we're diving into why gold has shattered records, soaring past $5,500 an ounce, a seismic event in the financial world. This isn't just about numbers, it's about global power, fear, and the instinct to protect wealth in uncertain times. Escalating US-Iran tensions have sent shockwaves through markets, fueling anxiety and driving investors to gold. We'll break down what's happening, why gold matters, and how it impacts your finances. Our expert panel will help us cut through the jargon and explain why gold's ancient allure is more relevant than ever. Why does a distant conflict make gold skyrocket? What does store of value really mean? And what does this mean for your financial future? By the end, you'll understand why gold is gleaming so brightly in these uncertain times. Let's meet our panel. First, Sarah Jenkins, a financial expert who translates Wall Street into Main Street realities.
Thanks, Aaron. We're seeing a massive flight to safety. People want something solid when trust in systems wavers. Gold is that anchor.
Next, Alistair Finch, senior commodities analyst from London, brings a global perspective.
From London, this surge is a vote of no confidence in a peaceful resolution. Investors see risk of wider conflict and economic instability, so gold, universal and borderless, becomes the asset of choice.
Both experts will help us understand why gold is the world's go-to safe haven.
It's an age-old story, but playing out faster than ever.
And it's a story with real consequences for everyone.
Alistair, what triggered this gold rally? The headlines have been dramatic, but what's really driving investors to pile into gold right now?
The spark was news that the US is considering a major new strike against Iran after nuclear talks stalled. Markets see this as a credible threat of escalation, and that's enough to send shockwaves through global finance. US naval deployments and past attacks have investors bracing for a dangerous new phase. The memory of previous confrontations in the region is still fresh, and every new move is watched closely.
Sarah, how does this news affect everyday people? It's not just traders who are anxious. This tension ripples out to families and workers everywhere.
It's not about policy details. It's about the sense of instability. People worry about gas prices, stock crashes, and their savings. Gold feels like a financial fire extinguisher. When uncertainty rises, so does the urge to protect what you have.
The diplomatic path is frozen, rhetoric is confrontational, and markets hate uncertainty. Every headline adds to the anxiety.
Exactly. No clear off-ramp means investors imagine worst-case scenarios, regional war, oil disruptions. Gold becomes insurance against catastrophe. The stakes feel higher than ever.
So gold's surge is a direct reflection of global anxiety. It's a barometer for fear and uncertainty in the world economy.
When the future looks cloudy, people want something that feels safe and real. Gold is tangible, trusted, and has stood the test of time.
And right now, that's gold. It's the asset people turn to when everything else feels risky.
The world is watching and hedging. Investors everywhere are recalibrating their strategies.
It's about preservation, not speculation. People want to shield their wealth from the unknown.
And that's why gold is in the spotlight. It's the ultimate fallback in turbulent times.
Let's dig deeper into what makes gold the ultimate safe haven, and why, in moments like these, it captures the world's attention. Sarah, what makes gold a safe haven asset? Why do people turn to it when everything else seems uncertain?
Gold is tangible, not tied to any one country or company, and holds value when markets are in chaos. It's a physical asset you can actually hold, which gives people a sense of security when digital numbers on a screen start to feel unreliable.
Think of it as a financial port in a storm. When everything else is unpredictable, gold is the anchor people trust to keep them steady.
Automated trades react to headlines. Then analysts adjust portfolios based on risk models. Gold often becomes the go-to asset when volatility spikes. And that's not just for individuals. Institutions do it too.
For big investors, it's both algorithmic and strategic. They use data, but also rely on gold's centuries-old reputation as a store of value.
Unlike stocks, gold's value isn't about future profits. It's about scarcity and trust. There's only so much gold in the world, and that limited supply makes it special.
In a crisis, people shift from growing wealth to not losing it. Gold becomes a shield, protecting what you already have.
Exactly. Stocks bet on growth. Gold is about preservation. It's a different mindset, one focused on safety over risk.
Central banks worldwide are stockpiling gold. They see it as a way to safeguard national wealth and stabilize their reserves.
It shows even governments want insurance against global instability. Gold is their backup plan when currencies or markets falter.
When central banks buy gold, it's a powerful signal. It tells the world that gold is still the ultimate fallback.
So, gold's safe haven status is reinforced at every level, from individuals to the world's largest financial institutions.
It's a global vote of confidence in gold's staying power. No matter where you are, gold is recognized and trusted.
And that's why it's the asset of choice in a crisis. When fear rises, demand for gold surges.
In uncertain times, gold's appeal is universal. It bridges cultures, economies, and generations as a symbol of security.
It's about trust, not just price. That trust is built over centuries of history and proven resilience.
And that trust is what drives demand. When everything else is in doubt, gold remains a constant.
Let's explore if gold is truly the ultimate safety net, and why its reputation endures through every financial storm.
Alistair, analysts call gold neutral and a reliable store of value. It's a reputation built over centuries, not just decades, and it's why gold is often the first thing people think of when uncertainty strikes. Why does that matter now, especially with so much global tension and economic instability?
Gold isn't tied to any government or currency. It stands apart from the political and economic decisions that can shake other assets. In a US-involved conflict, it's the neutral ground for global investors. When trust in paper money wavers, gold's appeal grows.
Sarah, what does store of value mean for savers? Why do people keep coming back to gold in times of trouble? Gold holds its purchasing power over time. It's a way to preserve wealth, not just for yourself, but for your children and grandchildren. Unlike cash, which loses value to inflation, gold's worth endures, even across generations. And diversification? That's where gold really shines.
Gold often rises when stocks fall. It acts as a counterweight, helping to balance out the risks in your investments. Adding it to a portfolio smooths out the bumps, especially in a crisis. It's a classic hedge, offering stability when markets get rough.
But is gold risk-free? That's a common misconception. No, gold doesn't pay dividends, and prices can drop when fear fades. It can be volatile, just like any other asset. It's insurance, not a magic bullet. Best as a small part of a diversified portfolio. Think of it as a safety net, not the whole plan.
Rushing in at record highs is risky. Timing matters, and so does patience.
Think long-term, not panic buying. Gold rewards those who plan, not those who react out of fear.
Gold is a tool, not a guarantee. It's powerful, but only when used with care and understanding.
Use it wisely, make it part of a bigger, balanced strategy.
And don't bet the farm on it. No single asset should ever be your only hope.
Let's see how other metals are reacting. The world of safe havens is bigger than just gold.
The story doesn't end with gold. There are other metals that play important roles in global finance.
Silver, platinum, and copper are all in play. Each has its own strengths and risks, and together, they help paint a fuller picture of the market.
Gold isn't the only metal surging. Alistair, what's happening with silver?
It's more volatile, so it jumps higher in rallies. Silver is gold's little brother, a safe haven, but also used in industry.
Sarah, what about platinum?
Supply risks in key regions add fuel. Platinum's rally is driven by both safe haven demand and industrial needs, especially in cars.
Even copper is hitting records, which usually signals economic optimism.
So, we have fear driving gold and silver, and hope driving copper. Copper's surge is about China's stimulus hopes, not fear.
The market is sending mixed signals.
It's a tug of war between fear and hope. Exactly. Some investors are hedging against war, others betting on growth.
That's why markets are so volatile.
It's a complex, unpredictable environment.
And it's never been more important to understand what's driving these moves.
The metals market is a mirror of global uncertainty.
Let's look at the role of the dollar and interest rates.
They're key pieces of the puzzle.
Alistair, why does a weak dollar push gold higher?
When the dollar weakens, gold gets cheaper for foreign buyers, boosting demand and price. Gold is priced in dollars.
Sarah, how do interest rates factor in?
That makes it more attractive compared to bonds. Gold pays no interest, so when rates are low, the cost of holding gold drops.
Alistair, is U.S. policy unpredictability now a permanent gold driver?
Yes. Markets now expect sudden shifts in U.S. policy, so gold is a structural hedge, not just a crisis play.
Sarah, does this change traditional financial advice?
But now, true diversification may mean including gold as a safety net. The basics, diversify, think long-term, still hold.
The world is more unpredictable, so portfolios must adapt.
Gold is now a core part of that adaptation.
It's about resilience, not reaction.
Let's look ahead. What's next for gold?
The future depends on what happens next in geopolitics.
And how investors respond to a changing world.
Alistair, what could push gold even higher or bring it back down?
A U.S. strike on Iran could send gold to $6,000. A diplomatic breakthrough could cause a sharp drop. It's all about the headlines.
Sarah, will this crisis change how people view gold long-term?
Absolutely. Big events shape investor habits for years. Gold's role as a crisis hedge is now front and center for a new generation.
Are there deeper trends supporting gold, even if this crisis fades?
Yes. Global debt, central bank buying, and challenges to the dollar's dominance are all long-term tailwinds.
Sarah, what's your advice for anxious viewers?
Don't panic. Use this as a chance to review your plan. Add gold thoughtfully, not fearfully, as part of a resilient portfolio.
The goal is a calm, disciplined approach.
Build for storms, not just sunny days.
Gold's surge is more than a headline. It's a barometer of global fear and uncertainty. Escalating U.S.-Iran tensions have sent investors fleeing to gold, a centuries-old safe haven. Gold's unique properties, tangible, neutral, and independent, make it the ultimate crisis asset. This is a real-world lesson in diversification. Watching gold rise while other assets fall shows why portfolios need balance. The rallies in silver, platinum, and copper reveal a market torn between fear and hope. Ultimately, gold's gleam matters to everyone. It reflects our collective anxiety and signals the need for financial resilience. Paying attention to gold's message can help us all make smarter decisions in uncertain times. Thank you, Sarah and Alistair, for your insights.